Welcome back to my channel. In this video, I wanted to cover VICI. This is a real estate investment trust that owns a lot of hotel properties, casino properties that you would find in Las Vegas, like the Palazzo, Caesar's Palace, as well as regional hospitality sites and casinos. They're a really successful company that really focuses on this particular part of real estate. They operate really well and have been a growing company over the years. Now, high interest rates are a real strain on real estate investment trust. So the value of these companies has been going down. I wanted to take a look at VICI and see if the company stock is being discounted or if it's being sold at a premium. That way I can decide whether I should buy more shares or sell my shares in VICI. Before I jump into the full analysis, let me remind you that I'm an individual investor, just sharing my journey as an individual investor. I am not providing any financial advice, and I'm not recommending that you buy or sell VICI stock. Now let's take a look at VICI fundamentals. VICI has a market cap of $30 billion. Their revenue is about $3.7 billion. So you're paying about 9 times sales for the company. Net income is nice and high at $2.58 billion. The company has a forward PE of 10.57, nice low PE for a quality REIT. The dividend is 5.76. That's a nice dividend rate. REITs tend to pay high dividends, and this REIT certainly does that. A lot of analysts cover this stock, and they have an average price target 17% higher than the current stock price. The stock has been going down over the last year. It's down 12.7%. I think it's primarily higher interest rates. Higher interest rates really put a strain on real estate investment trusts because real estate investment trusts have to borrow so much money to invest in properties. So that is a reality. Higher interest rates really are bad news for a real estate investment trust. The revenue has been really growing for VICI. If you look at it from 2020, they've just been really growing. They grew 36% in 2020, 23% in 21, 72% in 22, and then another 38% in 23. They grew in their first quarter earnings a little over 8%. So just a really good growing company, very good sign. The forecast for the stock, again, 10 analysts cover the stock. They all have collectively a buy rating on the stock, and they have a 17% higher price target as an average. So very good rating on the stock. The earnings per share is expected to be $2.68 in 2024 and grow just a tiny bit in 25 to $2.75, and then almost no growth in the earnings per share in 26. So a good earnings per share, but not a lot of growth on that earnings. VICI announced their earnings on May 1st, and the revenue did grow 8.4% if you compare the first quarter of 24 versus the first quarter of 23. They have upgraded some of their debt. And again, with higher interest rates, you're going to have a higher interest expense. Overall, just a lot of good things. Net income did rise for the company. Available funds from operation rose 10.3%. That's very good. Very well operated real estate investment trust. VICI provided good guidance for the whole year of 24, and their available funds from operations is nice and high, available to pay for the dividend that the company has. So good guidance. The available funds from operation should be substantially higher than last year, and the guidance is shared with the investor. I'm going to use this guidance to see what the payout ratio is when I compare the dividend versus the available funds from operations. I'm going to value VICI as a REIT, and I use two different ways. First, I value the company using their dividend, and the second is use their earnings per share. I use these two methods because they fit real estate investment trust. If you watch my videos, I typically use free cash flows, but that's not the right method with real estate investment trust. Looking at the dividend, I first want to make sure that their dividend payout ratio is reasonable. And for a REIT, they have to pay a majority of their available funds from operations. That's just a rule with REITs. And 75% is fine. I'm going to use a 10% discount rate, and their dividend is $1.66 per year. I expect they're going to keep growing their dividend by about 5%. So it gives us a value per share of $33.20. Compared to the current stock price, it provides a 16% discount on the VICI stock. Looking at earnings per share, earnings are $2.47. I'm going to give them a PE of 18 and just small growth over time. Gives us a value per share of $45. So compared to the current share price, it's actually a 59% discount. On average, it provides a nice discount of 37%. I think investors are selling out of VICI in fear of those interest rates. And if the interest rates may drop, and if they do drop, the price of VICI should rise. It's good to know that there's a discount available on the stock. So should I buy more shares, hold, or sell my shares in VICI? So first, let me look at the company. Do I like the company? Do I like the industry they're in? Do I like the management team? And I like all the above. I think it's a really good part of the real estate market, which is owning casinos where people go and have a good time and usually spend quite a bit of money while they're at that resort. I think these types of properties are booming. People really want to travel. So it's a good time to be investing in this type of real estate. The management team's really good. They really know what they're doing. And I like that they keep growing the company. Really impressive. The second thing is I want to make sure that the dividend payout ratio is less than 80%. And I calculated it and it's less than 80% for sure. And last, I want a discount on the stock. And looking at the scorecard for VICI, they get passing grades across the board. Just a really good quality real estate investment trust. So I'm going to continue to buy shares in VICI and build a position. I have two other REITs. Another one is in the healthcare industry. They own places where the elderly can go live and get healthcare while they live there. It's done really well, CTRE. And the other one is MPW, which is in healthcare. And it's nice to have another real estate investment trust that is more focused on hospitality. Thank you for watching the video. I hope you found it interesting. Real estate investment trusts can really pay a nice dividend and are a really good part of an income portfolio. This company, I think, is a good quality company that I like owning. I hope you found my video interesting, and I really appreciate you watching.